Hello, everybody. Welcome back to the Prospero.ai stock live streams. I hope you all had a great weekend. We got a little bit of relief on Friday with a little bit of a rally after the market had been going down like a falling knife in the days before, and Bitcoin as well. So we're going to get into all of that. Before we begin with the topic rundown today, I see Johnny and JC are in the stream, in the chat. Good to see you guys. Be sure to drop a like if you're watching on YouTube or X. Good morning, go Seahawks. Congrats, NW. Congrats to the Seahawks winning the Super Bowl yesterday. One of the most boring Super Bowls of all time, if I can add my own opinion there. But yes, Super Bowl fun. Hopefully you guys all had a great Super Bowl viewing yesterday. JC said S&P ended up over 14% last time the Seahawks won the Super Bowl. Hey, there we go. I will take any bullish statistic we can get at the moment, right? Mario saying morning and a nice day in the street. Yes, we are seeing a green opening today here as well. The only time I was fine with it being so lame. Yeah, well, Super Bowl is always fun regardless, right? Good food, hanging out with friends. So I hope you all had a good watch party yesterday. Like JC was saying, the market is in the green, although we are still not seeing any kind of bullish signal from the net option sentiment in SPY and QQQ from Prospero. SPY is at 0. QQQ is rising a little here today. It was at 5 at the opening, and it's now at 9. So a little bit of a raise there, but a lot of work to do until we get anywhere near really the bull bear line that we were tracking back in the day of 40, which it feels like ancient history the last time those signals were up at those levels. We're going to get into some of the details. If you're not a Prospero investing newsletter subscriber, first of all, what are you doing? You got to subscribe to the newsletter. There's so much good information in there. But we're going to go over some of the things that were mentioned, like the K-shaped economy that's forming, the slowing labor market and the concerns from it, and a few other statistics about it, like the wealth disparity in America. Then we're going to get into the Dow Jones hitting 50K for the first time ever. And what does this mean? Is the market becoming a Buffett market again? Are we going to value stocks? How long is this trend going to last? If it is going more from all of the focus being on growth companies to value-oriented companies. Although the Dow Jones has changed a lot. There is some tech in there now, but what does it mean? Can the Dow lead the way for us? JC said, shout out to the newsletters. Let's go. Yes, they are linked in the description for anybody that does not know of the YouTube live stream, both the investing and trading newsletters. Very, very important if you want to be up to date on everything happening in the market, like these live streams. A lot of great information in there and how we use the Prospero signals in the portfolios. Then we're going to get into a stock that has not done well recently. Hims and Hers down again today. One of those stocks that has had quite a tough time in 2026. They are being sued by Novo Nordisk, and also the US government is backing basically Novo Nordisk. The USA Food and Drug Administration came out that Hims will not be allowed to produce copycat versions of Wegovy or the weight loss pill that Novo Nordisk makes. So Novo Nordisk stock is actually up on this news because they'll be getting less competition. And Hims and Hers down about 25% last time I checked. So not a great day. And this is one of those stocks that has just been talked about so much on social media that George has never really supported, and the signals haven't either. So now that it's down more, I mean, there has to be a bottom somewhere, right? But we will get George's latest opinion on the entire situation. Also reports that Hims Super Bowl commercial was misleading. You know, it's fascinating that you say that, JC, because when we've talked about Hims on the streams before, George always mentioned how, like, basically the only thing that was bullish about the company was the marketing of their products. So maybe they towed the line too much, and now the marketing has gone too far. And maybe I'm not really sure about if it, the details of the commercial, but it's interesting that that is the thing that could be their downfall when it was the thing that was propelling them forward for so long. We will also get into an update from Sam Altman about the growth of ChatGPT, OpenAI, and I want to ask George about the latest state of coding. He gave a statistic about Codex, a product from OpenAI, which is growing rapidly. There's Anthropic's Claude Code. So is coding going to be fully AI, or a vastly more percentage AI very soon? It seems like these products are being adopted very quickly and have gotten very good. So want to get the latest thoughts there. We'll highlight a stock that is almost as bad as Hims. I don't think it's quite as bad, but Snapchat stock down 36% year to date, has never gotten any kind of momentum since the COVID crash, after the COVID boom. And it's now at about $5 per share. So is this company going to be acquired? What is the next steps? Is the CEO going to be fired? How can Snapchat stock how does the story end basically for this company? It seems like it's crescendoing down, so it can only go down for so long, and something has to give here. So what's going to happen next for Snapchat? And last but not least, we have some questions from our Discord. So, like the newsletters, the Discord is linked down below. So, you guys can click on that link and join if you haven't yet. Um, but we have a channel directly for questions from the community. So, you can ask questions. We bring them all up on the streams. We stream every Monday at 11 a.m., every Wednesday at 3 p.m. Actually, next week will probably be a changed schedule because I think the market is closed on Monday. But typically, that's the schedule. And we'll be going over what George looks for when an IPO is coming to the market. How does he decipher whether he wants to be an investor in one IPO and not the other? And is it more than just the prospectus valuation, anything else that he looks for? And then we'll also be going over AppLovin and Core Stock, which were thrown up in the Discord as well. AppLovin, a popular Prospero signal pick. I know it's been very volatile recently, so it'll be interesting to hear about that. Johnny said LEU earnings tomorrow. Oh, so we'll have to talk about that as well. One of the stocks of the year, along with ASTS. Let's check in on LEU, see where they're at right now. I know nuclear stocks have been going nuclear, so we'll see. Where is LEU at the moment? Up 3% today, $270 per share. Up 10% year to date at the moment. So it got caught up with the downturn in the markets recently, but it's coming up off of its recent low. So an interesting spot before earnings. So it'll be cool to hear George's thoughts on there heading into it. Still way off its all-time highs, which he's been referencing recently as something he's looking for as stocks that maybe have a little bit more meat on the bone. FYI, everybody. We love to answer everybody's questions. So if you're new and haven't heard me say it before, feel free to comment if you're watching on YouTube or Twitter, whatever stock you want to hear talked about today. I'm about to do a look around throughout the markets and see how things are moving as we are opening up the stream here. We'll go through the Magnificent Seven at first. Although, let's see, is Walmart still over $1 trillion market cap? Yes, the Magnificent Seven is growing. The list of trillion-dollar companies is ever increasing. All right, so Apple is red, Amazon red, Google green, Meta, Microsoft green, Tesla green. I didn't realize until I looked at the end of last week just how aggressively Microsoft has sold off recently. They seem to be one of the leading on the downside type stocks of the Mag 7 these days. Let's check in on NVIDIA. And NVIDIA up 3.5% today. Oh, so there you go. You got a little explanation of why the market is in the green here. Some of the biggest companies in the world doing pretty good today. Broadcom, another $1 trillion plus company, also up over 3%. So it looks like a little bit of buying the dip in tech going on today. Some of those growth companies that, the A Labs of the world, that's up 10%. Let's just check in on SNDK. SNDK is actually slightly red on the day, so that stock's been incredible to watch. Every time I think it can't go any higher, it seemingly defies gravity. So SNDK, we'll see if that goes green by the end of the stream. Let's see what else is moving big. Anything here? We got to check in on the fintech stocks. Fintech has been terrible too. Hood is up 6% today. So Robinhood, a little bit of buying the dip going on. SoFi up almost 3% today. So some buying the dip going on in fintech. Coinbase, green slightly. This is interesting too. Let's check out MSTR. Where are they at? MSTR is down 2% at $132 per share, and they crashed to almost $100 per share last week. it has been wild to see the swings going on in crypto. And high growth stocks, and MSTR is probably the peak of both high growth, well, quote unquote high growth stock, I guess, and then involved with crypto too. So it's been crazy to see what's going on there. JC said Iron, NBIS doing well so far today. All of the AI infrastructure stocks coming back into favor. I saw Iron last week was down really bad after their earnings, but I think it all got bought in the same day. So people were looking to take advantage of a dip on that company. And yes, it is in the green, up almost 7% here today. NBIS, let's check out them. NBIS also up almost 7% today. Only up 5% year to date. So I don't know. It'll be interesting to see if NBIS can get that momentum that SNDK or Iron or still below their all-time highs by about a pretty good amount. I think like 35-40%. So we'll have to keep our eyes on NBIS. Form is up, said NW. Form. Let's check out Form. Form Factor up 6%. Interesting. Very bullish looking stock chart. We'll check out them in Prospero. Ooh, 24 net option sentiment for them right now in Prospero. That doesn't look great. But a 71 upside, 32 downside. Their net option sentiment chart is super, super volatile though. Going back and forth between like the low 80s to the high 30s. It's at a low point now though. So that's a wild looking chart for sure. Interesting. Thanks for bringing that one up, NW. That's a weird looking chart in Prospero. It's a stock that's really rising too. All right, let's see what other. I saw healthcare stocks were not doing great. I want to check in on UNH, see if they're in the green or not. I've watched for a while but didn't get in. Interesting. Super wild Prospero signals for that one. UNH is in the green today. It's now under $300 per share again. JC said Form looks like my EKG. That's funny. We'll see if any of these healthcare companies. I saw on Friday Molina Healthcare was down a lot. Oscar is another one of those popular social media names, down quite a bit. I think the healthcare stuff got some bad news, and the government shutdown obviously lingering. So these stocks are not getting any real support or kind of nothing to rally on. Yeah, Oscar is now at $12 per share. Just back in October, it was up to 22, so quite a pullback in that name as well. We could check out Bitcoin too. Bitcoin and ASTS actually. ASTS is only up 1% today. Wow, look at that stock moving around too. It was up 6% at one point. But I feel like ASTS has held up super, super well compared to a lot of other growth companies that got really hammered last week. I mean, ASTS has only pulled back from $120 to $100 per share. So it seems like overall that one's showing more strength. Dr. Carter is here. What's up, Matt? Good to see you today. Happy Monday. Any update on the app daily signals? Does that mean the trade alerts, Matt? App daily signals? I'm not sure. I think if you mean the trade alerts, can we confirm this? We'll get an update for you. NW said back in September, someone in the chat told George and all about CMPS. I'd like to say thanks. Up 33% since that live stream. I think it was John, but it could have been JC. Well, there you go. That's the value of the streams. That's awesome. Good to hear you.
That was Matt. Yeah, he was bothering me about that stock. Definitely Matt.
Well, profit is profit. So glad to hear it, NW. And hello, George. Welcome to the stream. Happy Monday.
Happy Monday.
Everybody's in a good mood after Seattle winning the Super Bowl. I think the world was rooting against the Patriots yesterday from what I was gathering. But the market is liking it too, up in the green today. We checked in on a lot of the Magnificent Seven stocks. Nvidia up quite a bit today. It looks like a little bit of buying the dip in tech going on. Prospero signals are still low, but QQQ was up to 9, and I think I saw it at 5 this morning. So raising a little bit. It's actually now at 10. So there you go, double of
Wow, look
this
at it
morning's
go.
number. Last week, it seemed like you were not quite ready to buy the dip and that was last Wednesday. So a lot happened since then. In a lot of the growth companies, crypto, all of that in the market. Are you feeling any better now that we've had a rally off the lows on Friday and a continuation today? What are your latest thoughts on the state of the market?
Hold on 1 second. I'm just posting this here. And one more place. I mean, I feel better about it, right? There's a lot of reasons to feel better than like last week. I mean, the QQQ net option sentiment recovering is, might have to think about moving the line, but it's still tough, right? Because it still shows heavy moving the bull and bear line, right? I might consider moving like the bear line to 10 and maybe just doing 10 or 20. The change is hard, but like I do feel like in this market that might be more appropriate because I certainly am feeling more bullish with QQQ at 10. But yeah, it's a tough market to read, right? Because there was a good rebound story that formed Friday and a good like, okay, buy the dip, but that was a scary free fall. There was not a lot of support at some of those prices. So yeah, it's definitely tough. It's a tough market to read. I obviously was feeling a little more optimistic, hence I went even long short. But it's going to be hard. It's going to be a hard market to read. We're shut down again, right?
Yeah, I believe so.
So yeah, that's hard. Right? It's like last time we were shut down for a bit and nothing happened. This looks like there was like a stronger reaction initially, but it's not easy.
Some of the you were like right to say like the bottom was falling out in a lot of those companies before the Friday rally. I think it peaked actually in like the pre-market on Friday before some buying the dip started going on. Is there any insights we can give to the viewers of the stream? Because the emotions get high when you see stocks making that type of move downward. Were you able to keep yourself in check or balanced, or does that come from like how you were positioning your portfolio before that happened? Because like if you got caught up in that and you were like all in high growth names, you probably saw some bloodbath in the portfolio last week. So how can you maintain like your head really when stuff is moving like that?
It's hard. And I think, I didn't want to get burned on like I did last time. And I went pretty short and that didn't necessarily work that well either, got a little overcommitted on IonQ, but I thought that would kind of like insulate me against ASTS and LEU. So I was trying to like balance that, but that's the other problem. If the market's down, those do insulate well. But when the market turned, IonQ went even more nuts than the other two. So, we had two last, even though ASTS was like a 10% win and LEU was like a 9%, we had basically like two. We exited IonQ before the end of the day, but we basically had, two losses of double that. So, hard to balance the risk. Marvell went up a lot too. Even though it was looking a little tough in the signals, it's a delicate balance.
And in our newsletter yesterday, we mentioned how there's a K-shaped economy forming. And I feel like I'm hearing a lot more people around the market starting to mention the labor market and the slowing of jobs and the unemployment rising. So can you explain for people if they're not sure what the K-shaped economy really is, what that is, and your level of concern on jobs and labor at this point?
Yeah, the K-shape basically is like, for the top 1%, for a lot of the wealthier people, they're going up while, the rest of the people, especially in the bottom 50%, are going down. The stat that we shared that's kind of shocking is that income above, I believe in the top earners, I forgot what it was. I think maybe the top 1% has gone up 3.7%. And then the bottom 50% only 0.9. So you're really seeing that limiting growth. I mean, if you think of 0.9, that's trailing inflation, right? So you're not in your real wages when you're going up 0.9 and inflation is, 2.7, you're losing. You're not gaining money. You're losing relative to prices. And, I think people feel that. And I think, this is what I always say, and it's kind of hard. It's the party with it's the problem with the two-party system. But I think people continue to there's a lot of politicians that continue to run on this idea that they'll be good for the people, whether it be, programs or tax cuts or whatever. It never really materializes for the people. And that's what I always, when people get very polarized on politics, what I'm always frustrated, just, where I'm at is, I always say I'm a single issue voter, and that's corruption. And I rarely get any candidates I'm not excited about. And what, I don't really talk about this, but I think it's an important part of the conversation because there are a lot of people. I don't vote in the presidential election, and I don't vote because I don't feel that there's a candidate that represents my interests. I don't feel that there's a candidate that's anti-corruption. I say I'm a single issue voter. And I think until we get more people thinking like that, I feel like I feel like I get so many people that think the candidates represent them because, they represent the social issues that they care about. But to me, if we're all getting, relatively worse off, we should be looking for commonalities instead of saying to me, even if the social issues are moving in the direction that you want, I don't think that's worth the price of getting relatively poorer, right? I don't think that's a fair trade-off, especially when that's happening more and more, and political contributions are getting bigger and bigger, making it easier to tilt the balance more. I don't think that's a good trade-off. And I think, I actually think we're running out of time to start looking at commonalities between us and starting to ask candidates to actually do things to curb this wealth imbalance problem. I think that's the one real issue that we have. And unfortunately, it's going to get worse. No, I actually think, in terms of, there's a lot of people that are just the old, Big Lebowski, we felt like we died face down in the muck. So you could vote. And I actually think, you look at the turnouts, I believe the voting, I think the turnout in this country is close to 50%, and say the turnout in Russia is 71%, right? So I think a lot of people will say that you have to vote. It's your democratic right. I feel it's my democratic right to say I am a non-voter and to say you have to put up better candidates. And I actually think the fix to a lot of this stuff is invalidating that political process and starting to say hey, more people to stand up and be I don't have any candidates that are for me. We have to fix this. I think that's the only way that people will take, that the political parties will start to take this seriously. I think that, as many people want change, there continues to be a lot of voting and a lot of polarization where people are passionate about people that do not represent their interests. And that's why I feel the way that I do. And, there's a lot of people that, will get mad at people for not voting. And it's funny, I am one of the only people that I know that is being open about being a non-voter because there's so much shame thrown people's way for not voting. And I think that's a big part of the problem because nobody ever has conversations with the people that are not voting. And some people say it's laziness, but the one thing that, I've talked to, because I'm open about it, I talk to people that, confidentially, I didn't vote either. A lot of people are scared because they don't want the same bullshit thrown at them. But the truth is, whether people think you're lazy or not, and some people, are just I couldn't get to the ballot box for someone that doesn't represent me, but it's all the same thing. It's all the same problem. I think a lot of people feel that they're not represented. Exactly. I mean, and that's why I bring that up, right? Because I do feel that some people, especially in the places I've lived, New York and California, they're just going to be if you don't vote for a Democrat, you're a terrible person. And I'm just look, I just don't feel that I'm voting for a candidate that represents my interests or represents the best interests of the people. And And I think that until we get reform, like I've been saying this for years, and I only see the problem getting worse. I only see the American people being robbed more and more. And that is the only commonality between the Democrats and Republicans. They keep on making the tax code better and better for wealthy people. That's the only consistency I see over all the years that I've been voting. And I don't like it.
I think there is a big difference between actively choosing not to vote, like you're saying, versus the other aspect of it, the laziness, just like I don't really care to act on it. But I do want to follow up on this whole thing of saying, like, is all the blame on the government and politics, or does like the private industry and business world need to take more of responsibility, accountability to fix some of these issues themselves and not really rely on it coming from like the government? I guess human nature is always going to have the people at the top like wanting to keep more. Everybody wants more. But what do you think? Should it be more proactive within business and the private industry to take on this challenge of the K-shaped economy?
I mean, my official stance, when people know that I worked at Bear Stearns in the summer of 2006, and my official stance on what happened there was that the government needed better regulations, because like you can't trust, like, it's kind of like the wolf analogy, right? If you leave a bunch of sheep like around wolves and you're just like, you don't eat the sheep, right? You can't expect to trust them, right? And it's the same thing with Wall Street. If they're like, oh, you better be good, you better not crash the economy. They've crashed it so many times. It's the same thing. Unless you put the laws in that prevent them, if you have a guy with a gun standing in front of the wolves and say, don't attack the sheep or I'm going to shoot you, or like a wolf attacks a sheep and then they get shot in front of the other wolves, right? Which is the kind of like, law enforcement that we really need that we don't. The wolves are probably not going to attack the sheep. It's like, it's the difference. It's the understanding. So yeah, it's like, I think there need to be better laws, right? It's the same thing, you look at it, you look at something like the Sacklers, right? Who are responsible and who got caught dead to rights, basically intentionally, going around like getting certain language about their drugs that they weren't addictive because they were long acting, all this stuff that, and the way that they sold it, they knew that it was going to get people addicted. They knew it. And they didn't do anything about it. And they got caught. They got caught red-handed with a bunch of evidence. And the fact that, they basically got a slap on the wrist, when it's just like, it's one thing if you take people's money, although I do think you make people's economic circumstances worse, you ruin their lives. And I think that should be a criminal offense. But if you're talking about people that like, if you're talking about people that like directly like knew they were going to get people addicted to drugs, and those people could overdose, they could die, and the amount of deaths we don't even know, because a lot of people when they finally did the right thing and stopped overprescribing, bought heroin because they were addicted to opioids, right? The fact that that's not a criminal offense, like the way we talk about, drug dealers, right? I don't think their products are responsible. I don't think the cartel has as many deaths on their hands over the same time period as the Sacklers. So why aren't the Sacklers like, and that's the thing that is the problem, right? It's the same thing. If you shoot the wolf, and this is the analogy, the Sacklers are the wolves that were like, you shouldn't go after the sheep. And then they went after them anyway, and there was no punishment. So the rest of the wolves are going to be like, we can keep eating sheep, right? Until there's real punishments for these things. The business community is not going to do any better. And like, it's always been this bad. I think the scale is just larger. Like one of the things that, we don't even know how bad it was because there didn't used to be like the media system, a story that I've told before. Yeah, there's plenty of good laws, JC. There's plenty of good ones, especially for Wall Street. But like, naked shorts are illegal and everybody knows there's still naked shorts. And they very well know who's doing it and they don't really do anything about it. But, Yeah, my favorite story on this, because I learned it and it was a real what the fuck moment. I mean, not only did you learn like there's all these little things like, they've known sugar is bad for you forever and they let like people slap fat free like labels on candy. So people think that it's fat free, it's good. But, and there was this war on fat, and there's actually a lot of good fats, and sugar, especially processed sugar, is never good for you. There's no benefits of it. And there's some benefits to some fat. So, there was this war on fats that was actually like waged by the sugar lobby. So that's why it's people like, and a lot of doctors signed off on that. So some people talk about doctors and if they're infallible. I do think, doctors on the whole are one of the better, more moral groups that we have, but it doesn't mean they're infallible. But yeah, there was a story that I've told before, but it's been a little bit, and I don't think we can ever hear it enough to know what like our system's really capable of. But there were all these seals around San Francisco that were turning like that all had this like rare form of cancer, a large incidence of it normally than that. And they tracked them, and in doing the research about where they went, they actually dug up, I believe it was like these papers, they had all this like DDT that they weren't going to use anymore. Really bad chemical. I think they used to use it in like bug spray. I think it was DDT. I don't remember. But basically they had to dispose of it and they had nowhere to dump it. And basically like the city of LA signed like an agreement. I think this is like the 1930s, with this company to let them to dump the barrels to the bottom of the ocean. And that's why like that ocean water is so dirty, probably for many reasons. That's why it's gross. You go in other places and it's a lot clearer. But they dropped all these barrels, and there was like the slogan of, people that wanted to dump things in the ocean back then. The slogan was dilution solves pollution, as in like the ocean is so big you can dump whatever and it's just gonna work itself out. Not so much. So that's why, I mean, and I think it's gotten way worse. I mean, on the scale, right? I think it used to be like there was bad things going on behind closed doors. But yeah, there's no conscience to business. And I do think, businesses like Prospero, like we are, the most important thing when I started Prospero is, and I've told this before, there was a lot of venture people that wanted us to, charge for the product. And I was like, we want to earn trust. That's the most important thing to us for our long-term goals for Prospero. And, we weren't a fit because of that, but we stuck to our principles. We really want to make it, we want to balance things. We want to make things more fair. And I do think there needs to be structural solutions. And yeah, we have a lot of hopes of the future that Prospero can be an educational tool that helps, a lot more people invest smarter. Because we can remember that, what people always, one of the things that Renaissance Technology says, they're like, they say, whose money are you taking? And they're like some dentist in the Midwest, because there's a winner and loser on every trade. And, I think we have to remember that a lot of what hedge funds depend on to make their money is, everyday people not doing their research. So, not only can we create a system where people are making more money through, the proliferation of Prospero, us building better signals, better tools, we can, essentially take money out of the hedge funds' hands, which went really well last year, and put it in the hands of people. And we hope that we could do that on a much larger scale as we grow.
Yeah, it's a really awesome mission as a company. With everything that you've said so far today and the tidal wave of AI and the impact on the job market, I'm wondering, do you think 2028 election cycle will be the first time we're going to hear like UBI being like a major topic in the way people decide? Or do you think that's too soon for that to be in the discussion?
I mean, I think it's going to be more relevant in like Senate races. I think we'll start to hear it a lot more in House races, because I don't think we're going to get a candidate that from either of the large parties that's going to make that part of the discussion.
So bringing it back to the overall markets, the Dow Jones hit 50,000 for the first time, and it's been I think it probably the strongest market of the four major ones to date. Are we entering a phase of the market where it's going to be more of a Buffett market where value is on the menu over growth? And if that's the case, how long do you think that can go on?
I don't know. Hold on, I just need to do one thing. So, I mean, I think we needed to broaden the depth. You know, we needed to get some breadth in the market. So I think that's going to be a shift. And I definitely, so what's good about value now, especially the right picks, is they can go up if the market keeps going down, and they also have potential if the market keeps going up. I think people are definitely thinking about breadth. I think they're thinking about rotation more. But I'm not ready to call the time of death on growth stocks. We're seeing this big rebound. I think we have to keep monitoring, but it's a story to watch. And I think now is the time. Like, I do think it's worth it. I don't know exactly how I do it, but maybe I'll look in the Wednesday letter. I'll share some of our favorite value picks.
Do you any off the top of your head that like come to mind?
No, I want to do more research.
What
but if
is
someone
even,
has any value stocks that they like, I'm happy to look at Prospero and give my interpretation.
what is even value of that quote unquote value stock to you? Is there any definition in your mind where like a company must meet certain standards to be in that bucket?
I mean, I think you really like the main thing that you're looking at for value is you're looking at probably not tech. Like, I don't really like, it's hard for tech because if you look at software, for example, right now, software is trading at a traditional, like if we were in a normal market for software, you'd be like, wow, these are great values here, right? But we're not in a normal market for software. So that's a bit tough, right? But I think if you're looking kind of outside tech, maybe communications, you're looking at stocks that have good PE ratios relative to their sector, relative to their closest comps, like PE, free cash flow, things like that. It's pretty simple, but you know, I think you have to be careful with overall value scans these days, right? Because I think you look at things like UPS and FedEx, and those are trading at those aren't tech, but they're trading at a discount relatively because there's some Amazon risk, right? I think same as some healthcare stocks are trading at a discount, but that's because of some government risks. You've got to be able to do that. Like, that's part of value investing too. You have to be like, okay, this is trading at maybe a discount for its sector historically, but is there a reason for that? And if you look around, you can't find a reason. That's value investing.
JC shared the ticker WM Waste Management as one of those companies. NW is saying, really hope you all succeed. Thank you for all your hard work. Appreciate the comment, NW. I kind of asked that value question because I was setting up for like Microsoft and Amazon, which have now pulled back a lot. And I think their PEs are like mid 20s now. And I'm wondering like what your thoughts are about them. I guess they're kind of the hybrid, like Swiss Army knife of growth and value.
Yeah, I mean, Amazon, that's actually a good price to where it is relatively. But like where we're talking, like Amazon used to trade at like you might call it similar to like Jensen Huang or Musk. Like Bezos was them before they were them, and even bigger. So it traded at a bit of a Bezos premium. So that's where you have to like wrap it in a little more. Like, people look at Amazon as a tech company, and it is, and they're really good at entering new markets, and that was part of the Bezos premium. But for a consumer cyclical stock, which they also are, and that's their official sector, but there's obviously some nuance to that. They're cheap, and they're cheap relative to Amazon historically, which is the kind of thing that you benchmark to. But that's why you have to say, like, that's why you have to do a relative historical analysis, right? And it's just like, well, are they cheap, right? Or was that all the Bezos premium? With Jassy in charge, like, are we still on the Bezos premium? And I think there's a legitimate question whether that's still a rational thing, right? I'm not sure it is. One more thing, sorry. And then you say like, so part of the Bezos premium, right, is that they were always very good at entering new markets. So, they trade more similar to a tech company in that there's always optimism of growth or future growth or an announcement that can cause growth. But if you think about it, like, they are not expanding at the same clip as the Bezos Amazon, right? A lot of the ideas that they're working on are ideas that they already worked on. There hasn't been like a big new idea. from them in a while. Like, yes, things in healthcare prescriptions are kind of exciting, but that was already put in motion for Bezos. So it's like the Bezos premium, the entering new markets, like, is there still an argument for it? I don't know.
So I think it's super interesting when you compare Walmart against Amazon. Walmart is now over $1 trillion and about half of Amazon. Amazon is like 2.2 trillion, so a little bit less, but like basically half. And Walmart has a higher PE than Amazon. So I feel like the only way you could explain that is that the market is more fearful of all of Amazon's endeavors outside of their retail business, because that's the only way you get a lower PE, right, than Walmart. Like, can you do you think it makes sense that Walmart would have a higher PE at this point than Amazon?
No sense. Like, that's like, I mean, that's where, let's look at profitability and growth. I mean, that could be a justification, but let's check out, like, I don't know about Walmart's growth, so I do want to like be informed on that. What are they? WAL? No.
WMT.
See, 50 profitability, 45 growth. Yeah, I think that's one of those things where it's like, I think retail investors, especially, like, yeah, Amazon 68, 60 growth, like 79 upside. People are starting to see Amazon as a value. Like, I think that's interesting. I'm kind of selling myself on getting into a long-term position with that. I think the way you got to look at it, right, is, I look at it similar to AMD and NVIDIA, right? And I think especially in the retail community, you could end up getting an old thesis, like mining an old thesis where it's like, oh, Walmart is a better value than Amazon. And for a while, like, Amazon had like a 50 PE and Walmart was like, 20, right? And now, like, that narrative has been reinforced to a point where it's no longer relevant, right? When we looked at AMD versus NVIDIA looked like the better value again, right? So you always got to be careful about that kind of thing.
Yeah, super interesting to watch how those two play out. And do you think we'll ever see, or last question on this, where Walmart will have a bigger market cap than Amazon ever?
No. I still would not bet on Amazon like that long term. Dangerous against them. And I'm kind of talking myself into into a long-term position when I saw that.
We'll have to keep our eyes on it. Spinning to the next stock I want to bring up is Hims and Hers, down about 25% today after a ton of weakness in the company. I don't know. They got to be down like 70, 80% from all-time highs at this point. But it came out that they had announced they were going to launch a copycat Wegovy weight loss obesity pill. And the same day that they made that announcement, Novo Nordisk came out and said, we are going to sue them if they do this. And then later, I think the next day, the Food and Drug Administration in the USA came out and said they're going to take swift action against any company that does this. And this just escalated the downfall of Hims stock. We've brought this one up a few times on the streams because they've always been a popular name in the social media finance space. You've never liked them. How low can the stock go? Like, does this company have a future? Like, are we going to find a bottom? What are your thoughts on it? I mean, they're taking on the pharmaceutical industry, so it's a tough challenge.
I don't like to toot our horn too much. But that's the beauty of the Prospero signals, right? We could always look at Hims and see that it was not only a very short-term driven trade, like upside versus downside never looked good. And the profitability growth, never looked all that good. Sometimes it would have high net option sentiment. It was almost always running on social sentiment, right? So it's really easy to see what drives things sometimes, right? And that was one of the more interesting things about Amazon things is I saw the social sentiment turning on it. And I'm probably thinking of, depending on what it's doing today, I'll take a bit of a closer look, but I feel like it's definitely an interesting ad. But yeah, it's heading up. It's kind of hard, right? It's kind of hard when it's that socially driven. And a lot of what I talked about, right? I talked about that it got a little too much excitement and there was just so much continued growth built in. And it's very hard for a company to keep growing, especially in, this is what we point out, a company built on like ripping off other products, right? Oh, Steven, you're frozen. I don't know if that's me.
Can you hear me? Hello? I can hear you and see you.
Can people hear me and not Steven?
Hello, hello, testing, 1, 2, 3. Am I gone? Mario said both good, both good, both good. Okay, good. Oof. Good thing I didn't say anything crazy. I thought you guys couldn't hear me for a second. I guess it's George then. Well, sorry for the brief intermission, everybody. We were just cooking for a while. I feel like the stream's been great today, but drop a like if you haven't yet, if you enjoyed the content. George, can you hear me?
Yeah, you froze for a second, but I guess that was me.
Okay. Did I have a follow-up for this top? Oh, someone before.
Where did I cut out?
You were just talking about like the thesis, how it's difficult to judge these companies when the social sentiment is the thing that's driving them, and tough to grow. Oh, I think the last thing you actually said was like their business is based off copying, stealing, or essentially of like it's how sustainable is that?
Okay, I should be back. My internet speed's back up. Can you hear me?
Yeah, we got you.
Where do you lose me?
I think the last thing you said was like it's tough. Their business is tough when they're copying. Essentially, is like their whole business.
It's very tough when you're depending on that, especially like these companies are very good at being litigious. These drug companies, right? They've had this for like a long time. So you're really betting on a company like Hims. It needs to continue to find new products, right? Because it can get capped out a little bit, and then you have to bet on them not getting a legal situation, which is also a tough bet.
So when we talk about
that's why we're always hesitant. We're always hesitant to get into, and if you abstract it a layer further, right? Like not just the business, but the stock price growth is contingent on social, like people on social media continuing to feel good, and people on social media can turn on a dime,
Mm-hmm. And the social is basically built on the marketing, which is kind of what you said was the driver the last time we spoke about them like months ago or whatever. And people were saying that they're now getting also criticism for some misleading marketing in their Super Bowl ad. So it's like when that is the driver of your business, you kind of have to keep pushing it, right? And like you eventually run into a line of where you can't, and maybe they've overstepped that. And so you're basically saying you're going to stay far, far away.
Yeah, a lot of potential risks.
I want to also bring up an update about OpenAI. Sam Altman declared code red back in December for the company based off the competition from Google and others. They're now back to exceeding 10% monthly growth, so he's happy about that. He also shared that Codex grew about 50% from a week ago, which is their coding product. And I've been hearing more about like Anthropic's Claude Code, now ChatGPT, OpenAI with an update on coding. I figure you have like a good pulse on the latest of this. So like, how good is the coding of the AI products nowadays? Like, is it taking a huge portion of what's going on in the startup world, business world at this current moment?
Yeah, I mean, there has been a big shift, right? I think there's been a big shift and they said they were going to do this, that they wanted to focus more on B2B and people using, because that's where they like, Claude was kind of eating their lunch on that, and they were only investing B2C, and a lot of the money is going to be in B2B. So Codex, Gemini, they all have, these products are getting really, really strong. And it's definitely something where I don't know if they can catch up, right? I think they need to do it, and I think they need to do it now, especially before there's ads. And people have some brand loyalty with them, but with coders, it is kind of hard, especially if someone's already using Gemini or someone's already using Claude Code, to get them to do it. I do think there's potentially benefits of using all the systems together, right? Especially if you have a corporate license. We're definitely experimenting with using them all together right now. So yeah, I think that that's definitely something that you could say, okay, they might not switch to them, but there's a potential to use all of them. I'm definitely more worried about OpenAI than I've ever been since, Gemini has really come on. And I think we're about to see like, oh, Anthropic nailed them in that Super Bowl commercial. I think that was hilarious with that, like, getting advice about communicating with their mom, and they threw in like a date older women like commercial right into the advice. It was genius. But I think it's going to be interesting because they got such a loyal brand, such a high profile brand so quickly. But because they haven't necessarily had that long brand loyalty, it's going to be interesting if ads can change that a lot.
Mm-hmm. Yeah, I think we've talked about before. That's probably why Microsoft is one of the weaker Mag 7 stocks, because of all the open AI stuff going on. What is the outcome of these AI coding products? Is it, you think companies are going to hugely cut back the amount of engineers they hire, or is the output of the companies and the speed of delivering just going to be like way quicker? Is there a middle ground? What are your thoughts on all that?
I think there's going to definitely be a lot of job loss. We talk about it all the time, right? And I think coders are probably one of the most vulnerable, just because what they do. It's essentially, I think, a really good example of it. It's kind of like coding is a language, right? And you might say that people aren't really native speakers because they're not, right? They just learn code, and computers kind of speaking code, and we learn it. But we're basically having, I think an interesting equivalent of it is like we were essentially having people that knew English. I mean, maybe this is not the best because coding is much more complicated. Knew English and learned Spanish, and we're like, teaching, Spanish students how to, do things, maybe even learn Spanish, right? And now computers, they didn't really have a way to communicate with us, right? Especially smart computers. Now we've bridged the gap to communicate with us, so they can, speak more of our language now, so they can communicate with us. And they're basically like, now teaching their own language and programming in their own language to other computers, and we've given them the right tools to talk to each other. I think one of the more interesting things is I think I told this story, but like, there's supposedly walls and permissions between, agents, and this agent didn't have permission to get this certain piece of information, but actually asked another agent with some auth to get the information for them and give it in like another section of the company. And that's kind of scary, but that also shows how smart that they're getting. And that's what I'm talking about. They can now communicate between each other. So yeah, I mean, I think we're in a very, I think we're definitely in a time where we're like we've been saying, the job loss is inevitable, and nobody's really planning for it.
I think this AI is causing a lot of the fear going on within consumers and the economy that I'm about to bring up. But I thought this story was super cool, a little bit of like the psychology of the consumer in today's economy. So people were bringing up the fact that this trend, I don't know if our viewers have seen it, but there's like a popular social media trend of like it was especially in like January, of posting photos from 10 years ago, 2016. But they're saying this is more than just like a trend now, and people are latching on to this, good feeling, good vibes they get of like rewinding the clock, going back 10 years. And it's like a sign of that people are unhappy with the way the economy or like their career or whatever their earnings feel today. And they want to rewind the clock to a time where it felt better. And it's more than just nostalgia. It's actually like a psychological thing that's going on within consumers. And they were saying that it's going to actually benefit companies that were present back in the day in the like late 2015 to 2020 time range, people will go back to them consciously or subconsciously from this trend that's going on. I'm interested in all that like psychology stuff. Do you believe in that type of thing, George? Do you think that's actually going on? I feel like a lot of this stuff happens without people like consciously thinking it. Like it kind of just like takes over. But what do you think? You think that could be a trend that we'll see happen? And would you be interested in companies that were more popular a decade ago than the startup or the ones that are on the cutting edge right now?
Yeah, it's one
Retail
of those things where it's just like quite possible, but I wouldn't trade on it, right? It's the same thing that we talk about where it's like could be a good trade. It's not really in our zone, right? And it's not really our zone because we have to understand like the probability distribution of something to understand our upside well. And it's just like I don't know how much this little trend is going to ultimately have people buying these, brands that had their heyday, 10 years ago. Like I don't know the impact. Like, would I bet on a small change in a lot of these things? Yeah, like it might have, but it might be like a week or two and it might not really move the needle that much. But like, and this is why, we'd watch net option sentiment, things like that. I mean, the other side to that, of course, is like, could people be going out and buying the stock today and part of that trend? Possibly, but again, it's a difficult thing for us to quantify.
Yeah, so I feel like you always remain steady in like the numbers, so something like that. So like your explanation is very good there. JC was saying nostalgia is powerful, and NW saying entire industries are built on nostalgia. Yeah, they got to pull at the heartstrings to get people to make some purchases. Another stock I want to bring up on the stream today. We haven't talked about them in a while. Such a bad stock, George. Snapchat. What is going on there? They are now trading at $5 per share, down over 91% in the past 5 years, 36% year to date. We've brought up this stock before, and it's always been the same story of like they just have nothing working. What at this point it seems like this can't go on for much longer of the stock just perennially going down. So like, what is the end of the story for this company, do you think? Are they going to be acquired? Is the CEO going to be fired? Any kind of timeline? Like, I feel like this stock just can't keep trending downwards. Something has to change.
It just shows how hard this stuff can be sometimes, right? Because the big story was, was it Instagram? No, Instagram just sold for $1 billion, but I can't remember if someone tried to acquire them earlier on and they stuck with their idea and didn't. I don't know if that was part of the story. I mean, I know that there's been plenty of stories of places that declined acquisitions, but I think they just declined an acquisition, and I think it might have been $1 billion too for Snapchat. Maybe I think it might have even been even more, because Meta was just, on like we should acquire all our competitors. But it shows that like betting on yourself is not always the right thing. And the thing is, I would say that other apps got like smarter about it. And then I think consumers got smarter too, because the big thing about Snapchat was like, oh, you can delete messages or like whatever, or like it's, but other apps like, that came along were like more tailored to that. Like, Signal, the Signal app for the same thing. I think it's the people, I think they were at WhatsApp before, and they made messages even more, secure and encrypted and things like that. So people were like, oh, like encryption is a lot better than whatever Snapchat's offering, right? Because, you don't know if Snapchat deleted it, if other people. So yeah, it just shows that just because you have a certain trajectory and just because your brand has certain recognition, doesn't mean that you'll keep going that way. And, sometimes selling is the best thing if you can't continue to innovate, or the time that you sold. Like, I don't know if I am remembering the Instagram story correctly, but I know that I recall that they turned down some earlier acquisition offers and then, sold at $1 billion, right? So timing is everything. And I think innovation is hard. And like some companies don't sell and they can keep innovating, and it turns out to be very, very smart for them. And then some companies don't know when they're maxed out on innovation, and that is, the time to get out.
Just been wild to see how how poorly that stock is done. I feel like they do have like a user base that they should be able to get better momentum in the market somehow, some way. But yeah, just nothing
They
going on
haven't
there.
innovated, right? It's
Yeah.
like a lot of the same stuff.
Yeah, very true. So do you think they'll be acquired? One of the mega cap tech stocks just scooping up an asset that's maybe has some value there, or at least the user base maybe they believe that they can make some monetize it better.
I'm not sure. It's a good
Mm-hmm.
question. I mean, you might argue at this point, like, maybe they have a user base, but, what do you really have? I mean, if they do get acquired, I think maybe, the most logical thing is, Meta. But I'm trying to think if there's another.
I have a super interesting idea. OpenAI.
Could be. Yeah, to just like embed in that. Like, yeah, they might want the data too. Like, it's a data play, all those conversations that didn't get deleted.
Mm-hmm.
But yeah, that's an interesting idea.
Interesting. All right, so we have a couple more stories for the stream today. Just basically Discord questions left to get to. But if everybody has been enjoying the stream, please like it up and drop any last questions you have for today in the chats on X or YouTube if we didn't get to a stock or a story you wanted to hear. All right, so the first question is, George, when an IPO is coming to the market, besides the prospectus and valuation, what other factors do you consider, or do you just more often avoid IPOs entirely?
I really avoid IPOs unless I'm seeing two things. A hot IPO market is one, right? We talk about that all the time. And then a stock that has like some kind of retail or social aspect to it. If it's on, social media and hot, like you can make a lot of money with those. Otherwise, like we saw with something like Figma, right? That had, retail recognition, and it was, I'd say, on the border. I'd say IPOs were already in a bit of a downswing. Like, bullish, I think, was kind of the beginning of the end for those IPOs, because that had a lot of attention, that did well, and then it lost steam real quick. But yeah, you kind of saw Figma after that. That was like I think we're in a bad market for IPOs now. And Figma had a lot of name recognition, but it just shows how things can change.
I feel like both of your requirements were met like over the summer or even earlier when those IPOs were going crazy, but they've all basically dropped. So would you have a very quick trigger with IPOs even if you did get into them?
Well, no, I think I'd only get in. I mean, what you could do is you could get in and then put like a 10% stop loss, right? And just let it go. And then maybe, move it up if it opened. Like, I think you have to be like, I think the real way to make money on those is have those factors, but then like maybe have a 10% trailing stop loss. So it just carried, and then the moment it went the other way and you could just watch it. I think that's the right way to do something like that.
All right, so moving on, we got just a couple single stocks to highlight that were asked about in the Discord. And also in the beginning of the stream today, someone brought up LEU. They have earnings tomorrow. Thoughts on LEU heading into earnings? I imagine they don't have huge earnings to report on yet, right? So is it going to be mostly their future, what they're looking for in a company like that in their earnings report?
Yeah, I mean, I think I probably want to get out before earnings, because they've been like, I think that they've been a little like last time we ran the earnings analysis on them and they didn't do well and they had a bad earnings. So I don't think the situation's really improved. And I mean, they have revenue on the horizon, so they could have good guidance and they could have good announcements. So I'm kind of like my hope is actually that they don't have good earnings, and then I can get back in after the dip, but it just feels too risky.
So other two stocks, we got asked about Coors, CORZ is the ticker, and AppLovin. People want to hear your thoughts.
AppLovin, I kind of wish I stuck with it on that big dip, because it did continue to have high net option sentiment. 94 net option sentiment right now. I mean, it ran so much today, it makes me nervous, but yeah, I should have it was at 9:40 a.m. on the 5th, it was at, or this might be better. It was still at, so it was at 93 on close at the 5th, 93 net option sentiment. It was trading at 374.29. That would have been a great place to get in. But we didn't. We should have.
I think NW meant the ticker FORM, form, in the chat. It says OFRM, but I think he said form before. And the form time series graph for net option sentiment, JC said it looks like is EKG. It's all over the place. So what do you think of a company like Form when you're seeing a crazy net options history, wild swings in it?
I mean, let's see. So, I mean, when I see something like this, it's probably thinly traded options, and it's probably a lot of swing trading during the day when you see that kind of behavior. So it's probably both, and those can be very hard. And you know what I always say is, like, some people are like, well, that's not really telling us much, right? But it is. It's telling us that it's volatile, right? And like, if you don't mind volatility, right, and you want to like, and you want to say day trade it when it's lower, and you know, because it does look like it's going, there is some behavior, especially some of the upswings before it goes up. But you know, to me, people are like, well, it's not clear, and I'm like, that is clear. To me, too much volatility paints a clear picture that I don't want to get into it, because it's not, you know, the unclear signal sends me a clear message.
NW actually did clarify. He did mean OFRM. It's a new stock. It's Once Upon a Farm as of Friday. Baby and toddler food.
Oh, I mean, I can put it in, but you know, I don't really comment on stocks that aren't in the system. Hard for me, especially a business I haven't researched. If I knew the business a little better, one thing that I did want to get on, because it was asked about, waste management is interesting. I see a 70 net option sentiment, 84 net social. Downside going down on a nice downtrend. That could be an interesting name.
How nice. To honor Buffett in his retirement, 2026 will be the Buffett market, and waste management and stocks like that will lead the way. We'll see. JC said, good call, George. Option chains showing thin trading. So knowing that and having said that, would you, like, in your mind, blend, if you're seeing such a volatile thing like that in Prospero, like kind of like take a more blend of the net option sentiment? Or would you just still look at the highs and lows?
No, like that's what I'm saying. I wouldn't. It's not a long or a short thesis, right? It's just like it's ignore, right? I don't read too much into it, but you know, no reason. If there's too much volatility there, it's not interesting. Not interesting either way.
So that is going to do it on our topics today. We can call for any last minute questions here. Has the net option sentiment changed at all for QQQ or SPY? Not really. QQQ is at 9, SPY still at 0. George, if you woke up tomorrow and you saw SPY net option sentiment at 30, are you going all long?
No, I mean, when I see volatility like that, it makes me nervous, right? I need to see some consistency.
This guy's asking about PayPal, been beaten up quite a bit. What would you need to see to buy?
What are the signals like on it? I mean, I don't like that. Talk about a company that hasn't innovated. Like 65 upside, 65 net options, some net social, but no, I'm not interested in that stock. I mean, maybe if I saw like 90, you know, if I saw like 80 upside and 80 net option sentiment, and the chart looked to be bottoming out, I could be interested, but short of that, don't think so.
JC said they just got rid of their CEO. Yeah.
Still, I'd have to see more.
Well, I think that's going to do it for today. Great stream, great topics, great chat. Thank you, George. Hopefully you guys learned a lot. And if you did, one last call out, please drop a like. And we will see you guys all again Wednesday at 3 p.m. for another Prospero live stream. And let's hope the market's green until then. But thank you, George. Thank you, everybody. We'll see you all soon.
Bye bye.